Hey everyone, welcome back to Product X. I'm Rena, your host. Today we're diving into a story that's sending shockwaves through both Silicon Valley and Wall Street. A startup called Ornn, founded by two MIT grads in 2025, just closed a massive $33 million seed round led by a 16Z crypto. But here's the kicker. Their price index got integrated into the Bloomberg Terminal, and ICE, the parent company of the NYSE, is partnering with them to launch the world's first GPU compute futures contract. This is huge. Vivian, want to kick us off?
Hey, Rena, thanks for having me. So yeah, I'm Vivian. I work as a senior angel investor at PreAngel Fund. And honestly, when I first saw the ICE partnership announcement, I immediately thought, compute just got its Wall Street passport. This is the kind of inflection point that doesn't come around often.
Nolan, your turn.
Hey, Rena. Hi, Vivian. I'm Nolan. I used to work as a CTO at a big tech company in Silicon Valley, and I'm pretty excited about this one. Finally, someone is tackling the pricing chaos in compute head-on. This market has needed a Bloomberg moment for years.
All right, let's get into it. Vivian, let's start with the big picture. A $33 million seed round is already eye-popping, but add a 16Z, crypto, and ICE into the mix. What's actually happening here?
Here's the thing. We're witnessing compute's transformation from just hardware into an actual financial asset. Right now, the market is a mess. A cloud provider quotes one price, a big AI lab negotiates another, and a scrappy startup pays triple. There's no benchmark, so when GPU prices drop, data centers can't get bank loans because nobody knows how to value the collateral. When prices spike, startups can't budget for next quarter. Ornn is basically saying, let's turn GPU compute into something tradable, like oil or natural gas, with futures and hedging.
Yeah, and from the technical side, that leap sounds simple, but it's actually brutal. You can't just scrape list prices off AWS and call it a day. Ornn's OCPI pulls from actual executed transactions, normalizes across hardware generations, data center locations, contract lengths, all these dimensions. That's the hard engineering work that makes the whole thing credible.
So, the financial side needs a trusted index, and the index needs real transaction data. Nolan, let's dig deeper into OCPI. How does a price index actually handle something as non-standard as GPU compute?
Right, this is the core moat. The trap most people fall into is taking fake listed prices at face value. Ornn's approach is completely different. Their benchmark comes from settled trades, not public stickers. They take hardware models, geographic regions, data center conditions, contract durations, and they run them through a multi-dimensional feature vector system at the software layer. What comes out the other side is a standardized fair hourly price. That's what gets fed into the Bloomberg Terminal. It's not a price estimate, it's a price discovery mechanism.
And that matters enormously for the financial products. ICE launching USD-denominated, cash-settled futures means data center owners can lock in future rental income by selling futures. AI companies can lock in future training costs by buying futures. Suddenly, something that was completely illiquid becomes a hedgeable asset. The whole credit and valuation model for data centers gets rebuilt.
This is fascinating. Let's shift to the secondary market angle. Ornn Compute acts as a subleasing platform, right? Nolan, explain how that works and why it matters.
Exactly. The pain right now is that massive compute capacity is locked into rigid multi-year contracts. A company signs up for 3 years of H100s, then their workload drops by half. They're stuck paying for idle GPUs. Ornn Compute lets them sublease that unused time to someone else. It's like having a secondary market for compute contracts. Startups don't have to commit to 3-year deals anymore. They can buy short-term, like trading spot stocks. The resource pool goes from frozen to liquid.
And that's where the real liquidity story kicks in. Once you have a secondary market, you get price discovery on both sides. Buyers get flexibility, sellers get utilization. This is exactly what the commodity markets looked like before the futures exchanges standardized everything. Ornn is doing the same thing for compute.
Now let's talk about the bidirectional indices OCPI and OTPI. I understand OCPI tracks the input side, the cost of compute. OTPI tracks the output side, the token prices from model companies. Vivian, why is having both such a big deal?
Combined, they draw a complete cost curve for the entire AI industry. OCPI tells you what it costs to train and run models. OTPI tells you what those models are actually selling their output for. When you look at both together, you can instantly see the compute inflation rate and the marginal profit room for the current model business. It's a level of data transparency that nobody in this industry has ever had. Investors and founders alike can make decisions in real time rather than shooting in the dark.
And from the infrastructure perspective, spanning from underlying compute all the way to the application layer, that's something traditional cloud providers can't touch. They own the hardware, but they don't own the pricing data across the whole chain. Ornn does, and that's the endgame control point.
Okay, final big question before we speed things up. The whole narrative here is that AI compute is becoming a financial instrument. Is this actually going to change how the AI industry operates? Or is this just a Wall Street fantasy? Vivian?
It's not a fantasy. It's already happening. The Bloomberg integration alone tells you the demand is real. When ICE launches futures, you're going to see a wave of new financial products built on top of compute. This is the infrastructure layer that AGI needs to scale. Without liquid markets for the most critical resource, the industry hits a ceiling. Ornn just removed that ceiling.
And on the technical side, once you have standardized pricing and secondary market circulation, the whole ecosystem becomes more efficient. Resources flow to where they're needed. That's not a fantasy. That's just how mature markets work. We're just late to the party for compute.
All right, lightning round time. Quick answers. Don't overthink. First one. Hottest take. Is Ornn the NASDAQ of AI compute? Or just another startup hyping a niche?
Definitely the NASDAQ moment. This is the real deal.
I'll say it's the NASDAQ moment, but the market will decide if it's the first NASDAQ or the next pets.com.
Fair. Second. If you had to pick, would you rather own GPU compute futures or just hoard actual GPUs?
Futures, hands down. Much easier to store.
Yeah, same. Liquidity wins.
Third biggest risk to Ornn's model? One sentence each.
Cloud providers deciding to build their own indices and cut Ornn out.
Regulatory uncertainty around treating compute as a commodity.
Fourth, 5 years from now, will compute trading look more like oil futures or cryptocurrency?
Oil futures. It's a physical underlying asset, not a pure token play.
Agreed. It's going to be more regulated, more institutional, more boring in a good way.
Last one. What's the one word you'd use to describe the compute financialization trend?
Inevitable.
Transformative.
Love it. Vivian, give us a one-sentence summary of today's conversation.
Ornn is building the financial infrastructure that turns GPU compute from an opaque, illiquid resource into a tradable, hedgeable asset class. And that's going to reshape how the entire AI industry plans, budgets, and grows.
Nolan, your turn.
The technical standardization of heterogeneous compute through OCPI and OTPI isn't just an engineering breakthrough. It's the backbone that makes the whole financialization story actually work. And it closes the loop from hardware all the way to token economics.
That's a wrap. Thanks to Vivian and Nolan for the deep dive. And thanks to all of you for tuning in to Product X. Same time tomorrow. We'll see you then.